history, equipment leasing has been a major industry. You may be surprised to know that Phoenician merchants leased camels and elephants for trade missions. Romans leased war machines to expand their empire. Columbus couldn't have discovered America without leased equipment. The Industrial Revolution would have died without leased looms, presses, and steam-driven machinery. Today, virtually all Fortune 500 companies lease much of their everyday equipment: tools, autos, office equipment, rolling stock, and computer peripheral equipment. In fact, more than $65 billion of equipment is currently on lease. Congress has enacted legislation to encourage investors to provide capital for leasing. Now, individual investors just like yourself can own equipment and lease to such distinguished corporations as Blue Shield, Buick, Federal Home Loan Bank, Philip Morris. Current legislation provides specific guidelines for investment in equipment leasing, making this one investment you must look into for the 1980s. The past 10 years have seen many changes and revisions in the tax code, but leasing rules have remained virtually unchanged. You and your tax advisor should turn first to Ulysses Capital Corporation for the right answers to your questions about leasing and solving your tax problems. Ulysses offers you the opportunity to participate in the advantages of owning and leasing IBM computer peripheral equipment. Ulysses has selected new IBM peripheral equipment, CRTs, disk drives, tape drives, and printers to lease for a number of reasons. This type of equipment is considered to be very profitable for investors over the long term. Historically, peripheral equipment does not become obsolete as fast as central processing units. Peripheral equipment can generally be utilized with most types of CPUs. Thus, as models change, peripherals can still be used. More and more small businesses are turning to computers and are leasing peripheral equipment after their initial purchase of equipment. As more people in a company become used to a computer, more workstations are required and more peripheral equipment has to be acquired. Typically, this new equipment is placed on lease to Standard & Poor's A-rated corporate users. As such, the leases have the following features: very reliable users, well-secured financing, factors for supporting high leverage. Let's look at some of the unique benefits derived from the Ulysses Capital Leasing Program. A 4-to-1 write-off in the current year. That means if you are in the 50% tax bracket, for every dollar of investment, you defer $2 that would be earmarked for paying taxes. An estimated average write-off of nearly 3-to-1 over the initial 5 years of the program. No sponsor markup on equipment. Equipment is purchased at IBM's invoice price or less. And positive cash flow from release of equipment projected to commence early in the program. We have already mentioned that only substantial companies are the ultimate users of this peripheral equipment. Let's take a look at the parties involved in these transactions. Ulysses Capital Company, an affiliate of Haas Securities Corporation, a 73-year-old NYSE member firm, provides tax-advantaged investments conforming to IRS guidelines. Ulysses Capital Corporation, an NASD member firm, acts as the private placement agent for Ulysses investment programs. UCC Management Limited acts as manager of all Ulysses equipment transactions. UCC Leasing Limited evaluates the purchase and selection of equipment and acts as master lessee in all transactions. Randolph Computer Corporation, the 20-year-old computer lease financing company, is a wholly owned subsidiary of the Bank of Boston. Upon the expiration of the initial user lease, Randolph will utilize its extensive resources to secure fair market value rentals. A master lease which assures the investor his rights over the life of the program covers term. A master lease will typically cover 8 years from the commencement date. Rents. The fixed monthly rent and the working capital are equal in the aggregate to the monthly debt service payments to the seller of the equipment. Net lease. All leases will be net leases, and the lessee will be responsible for all maintenance, insurance, taxes, other than taxes on the lessor's income, and all other costs in connection with the equipment and its use. The remarketer. The manager will enter into a remarketing agreement with Randolph Computer Corporation to remarket the equipment at the expiration of the initial user lease and to eventually sell the equipment. We've covered the tax advantages of the Ulysses program. Let's look at how money is distributed. When the initial user lease has expired, ranging between 36 and 60 months, the equipment is released to the same or another user. In addition to the fixed rents under the master lease, cash flow is generated from rentals to the new lessee. You, as the equipment owner, will receive 75% of the proceeds, net of marketing expenses. When the equipment is ultimately sold, the cash distribution will be 100% of the proceeds, net of selling commissions. Be assured that this program conforms with the 1984 Tax Reform Act. The tax opinion is by the prestigious law firm of Eisenberg, Honig, and Fogler, and compilation report reviewed by an independent accounting firm. Also remember that the equipment is purchased at fair market value. There is no markup on the equipment. The initial user lease is a full payout lease, as we have noted earlier, and lease payments will generate a positive cash flow at some point in the term of the lease. Let's summarize. What kind of a program do you want as an investment? Isn't it one that provides safety, tax deferment, sound economics, leverage for your dollar, and positive cash flow? Consider a leveraged computer peripheral equipment leasing program from Ulysses Capital Corporation. Consider the best.